Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. Now, the rally we saw in U.S. equities after the Fed's rate hike seems to have fizzled out. On Friday, the S&P and the Dow were at its lowest level in more than 3 months. Are you still expecting the Santa Claus rally to come to town?
Well, yes, Melissa, but it's hard to keep the faith. We are clearly bearish, but now, once again, we're becoming oversold. And so there's an opportunity for the door to open for a Santa Claus rally over the next, 5 to 8 days. If the Dow Jones, which is very narrow, 30 stocks, breaks below a level of 17,100, but the other gauges don't follow suit, or if they do, the other one that we're really watching is a NASDAQ comp, which is much more broadly based. If that can hold above 48.70, then we could very well be treated to a long-awaited Santa Claus rally. Also, technically speaking, if you took a look at the number of issues hitting New Year lows on Friday, was only 228 compared to the previous Monday, which was 632. So there's some very short-term positives. So I'd rather focus on that than the expectations of what's going to happen after we get into the new year, because we've been narrowing for quite a while. There is definite weakness in the market, and the market as a whole does look to be rolling over, but one cannot anticipate. One has to wait for things to break out. And right now, we're really in a period where the question is, will the Santa Claus rally come? There is a possibility, and it's very hard not to expect it under the circumstances, particularly after last week, which was so one-sided. Also, bear in mind, Friday was a quadruple rich. We had options, index options, futures, and index futures all expiring at the same time. So that volume that came in on Friday, although ordinarily, Melissa, would be very negative, could be explained from a trading short-term perspective.
Okay. Well, Dodge, also looking at fixed income, I mean, there were a few tremors last week, but the junk bond market seems to have stabilized. Do you think that the worst is over for high-yield debt, or are you expecting more volatility to come?
Melissa, I am definitely expecting more volatility. Yes, there is a support right now, and we're seeing some nibbling. We're not seeing it across the board in the junk bonds. And bear in mind, the majority of the bonds that are being issued by commodity-based companies, and they're going through quite a negative question period right now. So I don't suspect that there's going to be a huge, broad buying of junk bonds. I do see from some of the more sophisticated buyers some nibbling in different areas, but it is not broad-based. It's not huge at this point. But yes, for now, at least the junk bond market seems to have stabilized.
Okay, so not so much of a buying opportunity maybe from the more sophisticated investors. But you mentioned something very interesting, Dodge. Are there concerns of rising defaults among energy and mining companies with oil prices this low?
Well, yes, that's the question that's being asked, and the answer is not clear at this point. The additional question is, what is going to create additional price demand on oil? What is going to get the price of oil to go in the different trend, to go upwards, to start to go back to more historical levels? Right now, the answers to those are not very clear. You had the U.S. open the export market to U.S. producers. You have more oil coming. You have alternative energy sources. It's really hard to justify a confidence that the price of oil is going to go up, and so that does affect the outlook for junk bonds, and the implication is more negative than positive at this point.
Well, speaking about oil, you also mentioned that the U.S. Has approved a measure to lift the 40-year ban on crude oil exports. What exactly does this mean for oil prices, Dodge?
Well, actually, not really as much as one would expect. This is much more, yes, it's been a long time, 40 years. It's 40 years. It has been long, and politically it was a big win for the Republicans, who in exchange negotiated extensions in environmental measures, including solar and wind energy. So all this increases, well, first of all, it increases the supply of oil in the world market markets and opens the potential decrease for demand for oil as alternative sources are developed and are available. So right now we're going to be watching to see what the impact is. In terms of it was more of a political situation, and really from a world perspective, it's just adding to the supply of oil that is available, and it's just going to be the ultimate conclusion to getting oil prices to rise, for the demand of oil to rise. It's going to be a higher hurdle to jump.
Okay, what else are you watching as we round up the year and move into 2016, Dodge?
Well, we're being very short term. The end of the year is usually quite active. Friday will be a half day. The last business day of the year will be very active. Positions will be closed out. We're really watching to see if the Santa Claus rally does come, and if it does, it could be very short-term oriented, but it could have some real climax to it. But overall, we're looking to try to come up with more positive answers to the new year. At this point, the market continues to be very much regulated by interest rates and low interest rates. The implication is that interest rates will remain lower for longer, which is consistent with the tepid returns from risk assets. And in the world of modest growth and conflicts and uncertainty, and with asset prices already elevated by central bank exertions throughout the world, it's very hard to expect more out of the markets. But we're hopeful, and we're going to go into the new year looking for some positive beginnings.
Okay, thank you so much for your time. That was DodgeDorland, Chief Investment Officer of Landor&FuestCapitalManagers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6. And